Hello everyone, welcome to Finance with Brothers. I'm Ajay Sharma, and today we're talking about the world's most powerful digital asset, Bitcoin. We'll cover everything: what Bitcoin really is, how blockchain and halving work, its 4-year market cycle, why governments are both scared and interested, how the US debt crisis is fueling Bitcoin demand, and how to safely store your crypto. If you had bought just 1,000 rupee worth of Bitcoin in 2010, today it would be worth over 100 crore rupees. Yes, 100 crore. Let's find out how this digital coin became the world's most valuable asset. Let's start with today. In 2025, Bitcoin has crossed $120,000, and headlines are everywhere, from Wall Street to social media. But behind the price is a decade-long story of technology, scarcity, and human behavior. But what exactly is Bitcoin? Bitcoin is a decentralized digital currency, created in 2009 by the mysterious Satoshi Nakamoto. It allows peer-to-peer transactions without any bank or government, secured by cryptography and verified through a public network called the blockchain. Let's understand. What is blockchain technology? Think of blockchain as a digital public ledger that records every Bitcoin transaction ever made, open for anyone to verify but impossible to alter. It's the technology that gives Bitcoin its power, transparency without trust. No single authority controls it, math does. Back in 2010, a programmer famously spent 10,000 Bitcoins for 2 pizzas. Those coins would now be worth over $1 billion. From less than 1 cent to $120,000, Bitcoin has become one of the best performing assets in history. So, what gives Bitcoin its value? There are 3 things: scarcity, decentralization, and security. There will only ever be 21 million Bitcoins. It's mined, not printed, and the difficulty increases with time, just like mining gold. That's why Bitcoin is often called digital gold. Now let's understand Bitcoin halving and its cycle. Every 4 years, something called Bitcoin halving happens. The reward for miners is cut in half, reducing new Bitcoin supply. This creates a 4-year cycle. Year 1, accumulation. Year 2, bull run. Year 3, peak, euphoria. Year 4, correction. The last halving was in April 2024, meaning we're now in the early bull phase, historically the stage when prices rise the fastest. Like gold, Bitcoin is scarce and can't be counterfeited. But unlike gold, it's digital, portable, and global. You can move $1 million worth of Bitcoin in seconds. No borders, no banks, no permission. Now, here's something most investors ignore: the Bitcoin dominance chart. It shows how much of the total crypto market is made up of Bitcoin. When dominance rises, it means investors are moving money from altcoins back into Bitcoin. Normally happens usually before big rallies. When dominance falls, altcoins like Ethereum and Solana start pumping. So, Bitcoin dominance helps us see where the market's attention is. Let's talk about emotion, because that's what moves markets. The Crypto Fear and Greed Index measures whether investors are too scared or too greedy. When it's extreme fear, below 25, people are panicking. That's when smart investors buy quietly. When it's extreme greed, above 75, everyone is chasing profits. That's when smart investors start selling gradually. Our simple strategy should be to buy crypto during extreme fear, hold through recovery, and sell during extreme greed. It's not timing the market, it's understanding human psychology. Now let's understand why are big investors suddenly turning to Bitcoin? Because the US debt has crossed $35 trillion. The more the government prints money, the weaker the dollar gets. Bitcoin, with its fixed supply, becomes a hedge against unlimited money printing. Even political leaders like Donald Trump are talking about adding Bitcoin to the US reserves, a massive shift from skepticism to acceptance. Of course, governments are cautious. Bitcoin threatens centralized control. They can't manipulate or trace it easily. That's why we see strict regulations, not to stop Bitcoin, but to slow down the loss of financial control. In 2024, the US approved Bitcoin spot ETFs. Now, giants like BlackRock and Fidelity are directly buying Bitcoin for their clients. That opened the floodgates for institutional money, pushing prices to record highs. Altcoins like Ethereum and Solana are still important. Ethereum powers DeFi and NFTs, while Solana offers fast, cheap transactions. But Bitcoin remains the foundation, the blue-chip asset of crypto. Crypto markets are volatile because of futures and options trading. Traders use leverage, borrowing to bet big, which amplifies price swings. Recently, over $20 billion worth of leverage positions were liquidated in 48 hours. So always focus on long-term spot investing, not short-term gambling. Now the next question is, if you own Bitcoin, where should you keep it? There are two options. First option is to keep in exchange wallets, good for trading but risky. If hacked, your coins are gone. And second option is to keep in hardware wallets, like Ledger Nano X or Trezor Model T, which store Bitcoin offline, safe from hackers. Remember, true Bitcoin holders always keep their coins in a hardware wallet to reduce risk. Out of 21 million Bitcoins, about 19.7 million are already mined, and nearly 4 million are lost forever. That means less than 17 million truly exist, making Bitcoin even rarer than most people think. So, Bitcoin isn't just an investment, it's a global financial revolution. A system built on code, not corruption, scarce, borderless, and increasingly unstoppable. If you believe in financial freedom, Bitcoin represents that belief. Thanks for watching Finance with Brothers. I'm Ajay Sharma. Don't forget to like, share, and subscribe for more insights on Bitcoin, crypto, and financial markets. See you in next video.